Hi traders, John Howell here. Today I've just come back from a jog. Actually, you probably think I've just finished a jog, but I've just come back from a jog first thing this morning, and there's something on my mind right now I want to talk to you about with the big movements that's coming, and I really want you to be aware of what's happening underneath the surface and what's likely to happen moving forward. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Today I'm going to be talking about the big picture. If you're after a strategy of how to trade these markets, link in the description, join my next free training, my next webinar, and I'll teach you all the details about how I trade the markets. Now, let's actually get straight into today's training. I want to do today's video for you because something big, like real big, is about to hit the markets. And so what I mean by that is this. If we have a look about what's actually going on right now in the market itself, okay? When we look at the actual stock market, let's start with the stock market first, and then we'll get to the commodity prices. And why I believe we are in the greatest opportunity for you to generate serious amounts of wealth in these markets if you know what to look for. So here's the thing, guys. When we look at the markets itself, okay? Firstly, the markets itself are driven on what? Interest rates, on obviously bond purchases every single month, and then also obviously, you know, liquidity and so on and so forth, right? So, and obviously the interest rates. Did I say interest rates? Anyway, so the interest rates. Here's the thing. Right now, if you think about interest rates are a what? They're like a teeter-totter, right? Lower interest rates, higher asset prices. As soon as they start to slowly increase interest rates, guess what happens? It starts to slowly, not straight away, but slowly put a brake on the asset prices, such as property, and also stocks. So here's the thing. Right now, we are still at 0% interest rates. So that's what? That's bullish for the markets. We are still what? Still doing the bond purchases every single month. They haven't come out and said we're tapering yet, right? So the Fed is still doing what? They're still doing this to the markets. So if you have a look at that, then on top of all of that, if you have a look at literally the trillions of dollars that are happening around the world of buybacks from individual companies, because they can literally borrow money at so cheap and buy back their own stock, which is what? Bullish for the markets. But then if you also have a look at, if you look at just the money supply, right? Now we know when the Fed prints money, asset prices do this, right? But if you look at the M2 is the money supply in the markets. But if you look at that, roughly 5.4 trillion was created in the last big boom in the markets, right? After all being said and done, which covered the GDP, there's still about $3.5 trillion just sitting on the sidelines. That's 16% of the GDP. Still sitting on the sidelines to do what? To do ready to be deployed into stocks, commodities, which I'll get to in a minute, stocks, commodities, real estate, and even stuff. So right now you have all these things happening. Firstly, there is massive amounts of liquidity on the markets, massive amounts of liquidity on the sidelines, 3.5 trillion. And obviously you see record number of savings happen. Guess what's going to happen soon? That 3.5 trillion, the records amount of the savings that people have around the world are going to start to be reduced, and we're going to start to come into the market. That itself, now again, I'm going to get to commodity prices, inflation in just a minute, but I'm focusing on the stock market itself. On the short term, as long as the Fed doesn't start to slowly put on those brakes, like start to raise interest rates, and slowly, and if they don't start tapering, that's going to be very, very bullish for the markets. Still 0% interest rates. There's no brake putting there, right? They're not tapering yet. There's no brake putting there. right? Break pudding. I got pudding, right? So break pudding. Companies, trillions of dollars of buyback. No break pudding there. Break pudding simply means there's no breaks on why this market is going to keep going higher, right? And why the market only has a 5% pullback before we race up to new highs again. And then the last one, which is, so interest rates, no tapering, trillions of dollars of buybacks, and then also there's about $3.5 trillion on just dry powder ready to be deployed into asset prices. Guess what's going to happen to these markets? Right now, there is no break pudding. There is only a massive bonfire underneath these markets. And so if you are short in the markets, I'm seeing a lot of people putting their minds towards, but look what's happening over in China, and it's all going to go bad and all this sort of stuff, right? Bad stuff, because you're reading the headlines. But those headlines and that bad stuff is not affecting what's happening here in America, or happening in America. But guess what's also happening on top of all those four things I said? People around the world now, like Europe, who are trying to chase a return, are now coming to America as well too. So you tell me where this doesn't end with a massive blow off top. And guess what? We may have already started it right now. There is massive bullishness. So if you're thinking that this stuff out there is going to cause this market to, how is a bank in China going to cause this complete market collapse when you've got so much support around these markets? And that's why you see the markets now at all-time new highs again, or almost anyway, at all-time new highs. Why? Because we see that what's happening is this, there's no break pudding. There's 4 bonfires. Interest rates still at 0. No tapering yet. Buybacks. And still all this money on the sidelines. Right? Now, yes, there will come a time when they start to slowly put on the brakes, aka taper, aka start to slowly raise interest rates. But until that happens, if they don't do anything like that soon, oh my goodness, guys. You think 1999, 2000 tech bubble was big. Times that by 10 about what we're about to see in these markets. And by the way, we're probably halfway through that, probably even a quarter away through that. This is one of the greatest opportunities I've ever seen in my entire 17 years involved with these markets, about what is going on and what's happening here. And if you start to understand the moving pieces, like I'm trying to explain to you right now, you can see the path ahead, but then you also can see the signs of where the break pudding is likely to be in these markets. Now that's the stock market. Now that's not all stocks, by the way, guys. That's not all stocks. If you look at, say, the general S&P 500, Dow Jones, they're probably like that, right? Individual stocks are going to be doing the individual stocks thing. By the way, on an individual stock basis, there's incredible trading opportunities. What I'm talking about now is over the short term, next 3 to 6 months, maybe longer, right? Of what this the cause effect relationship is going to happen. The cause of is everything I just said there, and the effect is obviously what's going to happen. The effect is asset prices keep going up, right? But again, I also trade the markets. Again, if you join my webinar, I'll show you all the details to how I trade the markets. So I'll teach you my system, but what this main thing here is about the big picture and why I'm not telling you what to do here, but why capitalizing by having smart positions in the markets can reap tremendous rewards, like just insane amounts of money for one that is educated across the markets. Now, guys, the old me used to dive into the headlines, used to dive into the BS, and used to dive into, oh my goodness, look what's happening in China. It's going to cause a big meltdown here. And so that's the first thing. Now, let's actually go back to the big 3.5 trillion. Remember I said before, the 3.5 trillion I mentioned before? Remember the 3.5 trillion, right? Remember I said before they did 5.4 trillion? And now there's 3.5 trillion still in powder, so to speak, dry powder, ready to be deployed into stuff. Asset prices and stuff. Tell me how that's going to be bearish for inflation. How is inflation going to be transitory? No way. Because once that stuff continues to come back into the markets, guess what's going to happen to inflation? Oh my goodness. So if the Fed doesn't start to correct course really quickly, start to put a brake on this, meaning they don't start to raise interest rates really quickly, or at least start to slowly increase it. If they don't start to put a pause on the asset prices of the QE every single month, if they don't start to do that soon, guess what's going to happen? You're going to continue to see a rise in inflation. So inflation assets are likely to continue to be a massive boom move in the markets. And the thing about this is that you see that the Fed has always tried to create inflation. Now they've got it. What happened in the 1970s? Guess what? They were too late to try to slow it down. They let it go, and then all hell broke loose. And then guess what? It was too late. They tried to raise interest rates really, really quickly to try to slow it down. They tried to put pause on prices. They did all this sort of stuff to try to calm it down. Guess what? History repeats itself. The same thing is happening again. But we're at the start. So, what are inflation assets that you could hold that are going to benefit from? Bitcoin may be one. To me, the big one for me is gold. I think gold's been doing nothing, and I like to invest in stuff that people don't want to be part of, right? Buy when people are fearful, sell when people are greedy. So many people on the Bitcoin bandwagon, and I'm just like, not for me, right? So if I'm going to be deploying more money into the markets, to me, it's gold. I'm already in an oil stock as well. So I've been in an oil stock now for the last couple of months. So I'm going to be holding that stock because of the inflation that's coming. So traders, on a whole, I hope you can see that, yes, while we can trade the markets day by day, there's an enormous amount of money that is going to be created by the massive bonfire that is literally underneath these markets. And with the 3.5 trillion of dry powder on the sidelines, ready to be deployed into the markets, oh my goodness! You see any other bubble in history? You ain't seen nothing yet. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to johnsfreetraining.com, or there should be a link in the description, click on that, go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.